Welcome to Power Charting. Is value the next trend? We are going to find ways to discover whether value is what's coming next. And we have with us today special guest co-host Johni Scan. John, thanks for being here.
Great to be here, Professor, as always.
So we are going to start with, let me just go back to this page for a minute. We are going to start with a historical chart. This is the NASDAQ composite, John, from October of 2020. And this was really a retrospective on my part because I had been in the industry for all three of these IPO booms. The point that I made at the time when I showed this on Power Charting and at Wyckoff Market Discussion at wyckoffanalytics.com was to talk about how the IPO boom culminates with the conclusion of a multi-year secular bull market run. And these red up arrows represent these periods. So you can see right here, 1983. And I was young in the business then, but I was could see this happening. And this was a 1976-77 beginning of an important growth stock move, culminated with a IPO boom at the end. And the thing I would want to point out is that after that, we had an 8-year plus really underperformance by growth relative to value and blue chip, which is our subject for today. Now, 2000, in the 90s, we had this big accelerating run in growth stocks, the dot-com era, which was culminated by a climactic surge up here in the growth dot-com type stocks with an IPO boom at the end. And this boom went on for more than a year. And a tremendous number of IPOs were issued at that time. And that culminated with a big top and then a 9-year decline in the price of the NASDAQ composite, which is largely composed of growth stocks. Finally, in 2020, we can see here that there was a throw up and over this channel. And this at the time was the chart I put up, and I said, yes, it has momentum. It may be able to keep going for a while. We don't know where the end is, but we are looking at this as some kind of a climactic event with an IPO surge. And so note also, the conclusion we drew was that when this does turn, it's liable to result in some kind of a long-term undervaluation, decline in growth in relation to value and blue chip type stocks, as the other two did. So let's move on. John, any thoughts on this chart before we look at the next one?
Very interesting. Let's see what's coming up next.
So this chart is actually through October 31st of 2022. And in fact, the uptrend went on for a whole nother year into the end of 2021. And note, though, that the internal relative strength peak, John, occurred right at the point at which we raised awareness to this chart. And so you can see the blow off the peak, and then there was a momentum follow through, let's say, and then a sharp break, which was not only a break in the price of the NASDAQ composite and the mega growth stocks, but was also a break in the relative strength. Your thoughts?
Well, very interesting juncture. This is perhaps an indication that change is on the way, and that's really the focus of today's show.
There you go. So also, I would just point out that note how there was a pause prior to that last run up in each of these, which is just interesting. And also we would make the case here that now that we've turned the corner on the relative strength, that we have some multi-year undervaluation or relative undervaluation, underperformance of these growth stock themes to the value and blue chip. That doesn't mean they go straight down. They can have rallies. As a matter of fact, John, here I'm noticing that on this trend line, which is drawn on these 2 points, that we've come right back down to this very important trend line that goes back to 03 and 07 and reverse use of trend lines, and it's touching it here as of the end of October. And that could very well produce a rally in these very oversold growth stocks.
Good indeed.
Now, let's go to another look at this. So one thing we can do is we can do relative strength of value to growth. We actually have put this chart up in September of 2020. This is the Vanguard Value ETF compared to the Triple Q NASDAQ 100 ETF, which is composed of the largest NASDAQ growth stocks. And here at the time in 2020, we had a big decline in value, which we described as a selling climax for value. And that selling climax in and of itself is not a cause for necessarily for Wyckofians to start buying, but it is a place where value investors start to buy for some kind of a rally. And so, John, what do you think happens next?
Well, if it's climax, we're going to have a automatic reaction, a rally, I should say.
Well, and look what happens. So this is that area right here. And so this was that climactic selling surge in value. And then look what it does. It builds a cause. Classic Wyckofian characteristics. We've looked at this phenomenon in a number of different type relationships in the last couple of years since we started looking at this theme. But we made the case that there was a cause that needed to be built. Now, what I'm seeing here, John, and I guess I'd really like to ask you what you're seeing here now that this cause has been built.
Well, very, very typical pattern. Undersold, underthrow of the channel, basing activity there, possible spring-like, and moving up and through the upper side of the channel. So original accumulation, back up, momentum move up and out of the channel. Very, very significant action. We haven't seen that in a long, long time here.
Well, and what is the possibility here that we could have something that could go up maybe for a number of years? And I think this, John, is so interesting, is that not only a run up through the downtrending channel, but then breaking through it. And that to me is very interesting. And I wonder if maybe we don't get some kind of a pause and then another run up. And these can take a long time. These are all years. So this is a big structure and a big cause for a potential big move. So herein lies part of our thinking about value versus growth. And John, don't you have a scan for us later on this theme?
We do. We're going to take a look at correlation scan. Very interesting.
Cool. So now let's actually go in. One of the key points I want to make about rotating from growth to value or value to growth is that the asset class that's undervalued can start to actually perk up and act better even while the other asset class is still raging upward. And so you can get an early tip off about important rotation. And this is one of the big themes for today in going forward with the power charting trend model is we want to identify the conditions for rotation and rotation in a secular way. And here we are looking in this yellow shaded area up here at the top, John, is the top, the very sharp peak in the NASDAQ composite in 2000. And the bear market that followed into 2002 into the low was a very horrible decline for many of these growth stock.com stock names. And so here you can see that the materials sector at that time was really underowned and underloved. And so the materials sector, we're just showing this as an example because look what happens. What do you see happening to the materials relative strength, John, while the NASDAQ composite is going down in 2000, 2001, 2002?
Going up, formed a base, broke through its moving average, moved up, had an orderly pullback, and really started a multi-month year move. Incredible.
Now, that's like the early tip-off. So there's like materials are saying we're undervalued, we're underowned, institutions are going to come find us and start to systematically accumulate the materials sector, whichever stocks are most appropriate. This is the whole sector. So the thing to keep in mind is in the bear market, and this is a bit of a cautionary tale, is that we have a big trading range in the materials at that time, and that the real move in materials, the type of move that Wyckofians are interested in, came once we had the bear market low end built-in accumulation in the indexes, and they started to turn up. And look at the phenomenal run in the materials, which was all signaled by this big move early on. Now on the right, John, we have the today, the materials today. Are materials the place to be? And note that materials put in a top when NASDAQ composite put in a top. But John, what happened to the relative strength while all this was going on?
Increasing.
Look at this big, beautiful base. This is fantastic. So, and it's much bigger than the one that was back in 2000, 2001. And so a big jump up and out, which is a sign of strength, a backup, and now we're starting to mark up again. So, and John, look at this decline in the relative strength all the way through from the middle part of the decade. This is 2015 over here. So all of this is under performance by the materials sector, and valuation is becoming very, very cheap, which is an attraction for big institutions. So a very interesting structure. Now, just very briefly, we want to get on to some other things. Here's the energy sector. And so we'll just go really quickly through this. Here's the top in 2000. You can see the relative strength is starting to run, and prices do go up for energy then. And so this is early indication that this very undervalued group is starting to get some love. And then you can see over here, this is the big top in the NASDAQ now, and the bear market in 22 will look at energy, makes a big relative strength base and starts to mark up. And then we've had a really good upward run, one of the few really great investment themes of 2022. And the last thing I would point out is simply that this bull market that we got in energy, which went most of the decade from 02, 03 into 07, that occurred, big, beautiful relative strength and price bear market all occurred, and leadership occurred over a number of years. This is a classic campaign event, and the whole sector did really well. But this little move over here where rotation came in the top of the NASDAQ composite back into energy showed that energy was going to be a future theme for years to come. So could that be the case this time? Time will tell. And we aren't through the bear market yet. And so this we need to have potentially a new accumulation base to conclude the bear market that we are in. We're not ready to say it's over yet. We may get big respites along the way, rallies and so on. Now, last one, just very briefly, and this is just showing you the 2000 to 2003. So, John, we have here a decline in gold and silver index in 2000, 2001, and undervaluation, underloved, underappreciated gold went to a very low price back then. And then this base forms, and look at how both relative strength and price get in gear up, even while the big bear market in the NASDAQ composite is unfolding, and had literally a year and a half, 2 years to go. So so I'm not saying these are the groups to buy today. I'm saying these are the characteristics that we want to look for to identify rotation and rotation into a new emerging deep value themes. Okay, so now here is a power charting trend model of the US building group back in 2000 to 2002-3. This is the bear market low. This is accumulation. At that time, I don't think today is similar to then. Building materials went up because the interest rates were falling and money was flowing into housing. And so at that time, not the case so far today. So I'm using this as really just sort of a case study. And you can see, look at the relative strength take off in building materials here and an uptrend in price. And this is all while the NASDAQ composite is going down dramatically. And then you can see an accumulation gets formed in both price, relative strength, very important to Wyckofians. And then off goes the real bull market, which lasts about 3 years. And so we have price and relative strength in gear together up. Now, finally, look at this final high in building materials in 2007 with a non-confirmation by relative strength at the same time. So that's really fascinating. So anyway, so there's our case study for today. And finally, I just want to show you that things do ebb and flow in financial markets. And here you can see energy. This is the energy sector ETF. I showed this chart back in January of 21 when the accumulation appeared to be complete. In fact, it was complete at that time. Count line is 38, gave a count to 79 to 95. And here we are today on the right. You can see here, here's the flagged count on a vertical weekly chart. And we are right up into that zone with a slight upthrusting action here. This could be a place where energy wants to take a rest. Doesn't mean it's a bear market, but time will tell, and we'll get a better idea when we follow the structure as it unfolds. But this is a point of potential vulnerability. One more, let's look at Exxon. And John, why don't you take us through Exxon here?
Well, certainly we have the count area in the green box, and we see that counted up to 116 to 128. We are right in that region now, and consistent with the trend model, if we look at the relative strength, we see the base was forming, coincident with the count area, moved up, adopted positive slope eventually, and came right up, brought us a tremendous run. And that is the story on Exxon, consolidating and breaking out again.
And we showed this point and figure back in 21, January, when it was at a count line of $41 and was just starting to come out of that area. And when it was at 41, nobody liked energy stocks at that time. Big, beautiful accumulation, and that counted from 41 to 116, 128. We have just gone to 115 and change. So we're almost touching the 116 level at the highs here. So point and figure, phenomenal tool. And with that, let's turn to John's scan. So John, what do you have for us today?
Well, if we have an emerging trend in value, one simple scanning technique is simply to coordinate to a value proposition, which in this case is VTV, the Vanguard Value ETF. And we can do this using the trend model time frames. So for example, we look at some major indices here all the way down, large cap to small cap, weekly correlation over 39 weeks, and that has to be a very, very strong correlation, 0.9 or greater. 1 is a perfect positive correlation, -1 is inversely correlated, 0 is no correlation. We're going to rank these by their distance from a 39-week average. So if we take a look at what happens when we run this scan, that's our next slide. We have 13 potential candidates that meet that very, very high level of correlation to a value ETF. Some of these stocks are indeed part of that, others are not. If we take a look at the few charts that we have, we see that, for example, Emerson Electric is very, very similar in appearance to VTV, which is the candle chart just under volume, and the cyan line is the chart of the correlation over this period of time. So there was a small period early this year where VTV was really going up and Emerson was coming down a little bit, degraded a correlation for a period, but right back up into the 0.93 area, very strongly correlated. So if we look at the attributes of the stock, 16 PE, 2.29, yield does have the characteristics of value, and it's in a group that we like, the industrial sector. So a lot going on there. Your thoughts, Professor?
Well, I love the way it's starting to show the characteristic of wanting to get above the long-term moving average, and also the relative strength is very clearly in an uptrend. We don't have a confirmation of trend yet, but we could have that within weeks. So, and very good strength off the low here. So a lot to like here.
Still early, but important correlations are emerging.
Okay, our next one, Kite Realty.
In the retail REIT sector, so this has maintained a fairly consistent high level of correlation over the past really 2 to 3 years. Very similar chart appearance, and is hanging out near the highs and at a 0.92, very, very strongly correlated with value. And notice our relative strength is just gently moving up in an uptrending fashion, although it's negative relative to its overall performance to the S&P. It is emerging as a potential value proposition. Negative earnings here, but high yield. I really don't like things that have negative PEs for yield purposes because they're burning cash somewhere. But interesting chart to look at. Your thoughts?
Potential reaccumulation that's been taking place since mid-21. It's trying to attack the highs, really good rally in October. And so if it can keep climbing up through the prior highs around $22, and then consolidate there, I think this is really a very compelling picture with a great relative strength characteristic also. So a really good one. Okay. Prudential Financial.
Life insurance, it's been an interesting segment industry group of late. Look at how it's just hanging up near the 0.992 correlation level. Very, very high correlation. We do see that it really does express a value proposition of PE under 19 and a 4.64 yield. Obviously, the market likes it. It's pushing it up towards its highs. And interesting proposition on the relative strength, gently moving up over time, still negative to the S&P over the period of the chart. But when we rotate into a previously unloved sector, what would we expect? We don't expect outperformance because indeed it was the underperformance that brings the value proposition. Your thoughts, Professor?
Well, I think we should pause here, and we're going to have a brief overtime segment. John has a few more charts for us, and we have a swing trading case study for you in addition. So give us 10 more minutes. We'll be right back. We are back, and we have Johni Scan with us. He's going through the results of this very interesting correlation scan for value. And so this could really help us find value characteristics in the stocks that we're most interested in or could be interested in. And so with that, John, the only thing I would add to the Prudential chart is just that the relative strength is in an uptrend. It has been since 2020 and got above the moving average in late 2020. And the potential for a good rally here up to the highs is very compelling. And if it gets up and out, it could just keep going. So with that, let's move to Teledyne. What do you see?
Well, this is really an interesting proposal here. We don't have the degraded price action during the 20 COVID lows that really express almost a shakeout rather than a complete failure. Pop back up from the 195 area, and now we're hanging out into 400, almost reached 500. What an incredible run over that period of time. Relatively not that cheap at 28 PE and no yield. So this is an interesting case study because it shows the limitations of correlation. It's not necessarily a value stock, but it has performed very, very consistent with the way VTV is formed. But certainly in a value area, we are looking for yield and lower PEs, none of which are present on Teledyne. So you always have to remember, correlation is not causation. It's related, but it may not be causally related, such as value to value. So interesting proposition here. Same thing in a relative strength area. Relative strength is not absolute strength. Just because something is relatively strong does not mean it produces positive price gains. Your thought, Professor?
Just that I would tend to use these lists in combination with the power charting trend model. I want confirmation of uptrend in price, confirmation of uptrend in relative strength. And when I see those characteristics combined with a value type stock or a theme that is the sector and the industry group is going up into a primary uptrend, those are the stocks I'm most interested in. Teledyne, has industrial characteristics in it also, even though it's an electronic equipment company. It's very much an industrial type company. And so if it can get a month or two of uptrend above the moving average, it could start to turn that uptrend, that average up, one to put on our watch list and keep an eye on. And so the next one is ONEOK. And what do we see?
This is from the pipeline area. Notice the P around 17, just over 17, big yield 6.15, and high correlation of late with the value fund, and very close to its highs in the 70 area, 71. So we're moving up off of those lows. And we definitely have something to look at here with potentially value and yield and a high correlation to BTV. And look at that relative strength going back really to early 21, late 2020, moved up and over its moving average, both adopting positive slope after the cross. Very interesting things going on there. Your thoughts?
I like the look of this relative to the trend model, because the moving average of price is going sideways here, and the index or OKE is starting to get above that, keeping the moving average pointing up. We already have an upward pointing relative strength line, and above its rising moving average. This has the characteristics that would suggest a continuation of a prior uptrend. So this is the type of a theme I'd want on my watch list. So it looks very good, and it looks like it's been building a cause for since late 21.
Yes, and we do see some of the attributes of the trend model. The 13-week moving average crossed the 39, both adopted positive slope. We moved up from there, and the $25 area now at 60. We see a similar move a little bit later in time with the relative strength. So very interesting. And note here, the relative strength or the value performance to the S&P over the period of this chart is just under 0, but very high correlation to value. And our Teledyne, that was up 90% compared to the S&P, but not necessarily a value stock. So that's an interesting proposition there. You can tell these things by using the price performance feature on the StockCharts charting platform.
We don't we look for all the themes that can meet the criteria that we just looked at earlier with the case studies on the 2000 period. And we can see this rotation occurring even in the bear market. Now, not all themes are going to be value themes. We're identifying value here as a theme, but we're also looking for other maybe blue chip themes. We're looking for other industry groups that are correlating and leading to in their uptrends on relative strength and emerging price structure, and really looking for those to lead once the bear market low is in and accumulation is forming. So it's an all-inclusive game. We don't just identify one characteristic and say we got to own value, but value could very well be an important part of the playbook in a new bull market. And we can definitely see the relative strength emerging in these value type themes, as we are seeing in other themes also. So a very good scan, and Johni is going to show us other great scans in the weeks ahead that also identify these emerging leadership type themes in other areas of the market. And with that, let's do a swing trading case study here. This is the Russell 2000 ETF IWM, and all I want to do is show you this one box reversal point figure chart, because you can see these swing trading case studies forming. And the first one we're looking back here is June, July. So you see a base accumulation forming on a one box scale, which is a smaller scale, with a jump out and a backup that occurs. And then this gives us a 12 column count. We take that count across 2-point scale on the left and the right, 2 points per entry. And that gives us a count up to 186,204. We went right to 200, very close to the high for the count area. And so rather wide count, that's the reason for the 186 to 204. But note how it built somewhat of a distributional structure at the 200 area. Now we have another one here. And this one is a larger, wider count with a jump up, out, and back, 15 columns across. And it's just backed up there. I've actually entered today's entry, which is the 180, 182, 184 X's. I put those in here because that all has happened today because Russell is pivoting off of this backup very aggressively. We'll see if it can keep going, but we want to know what the count potential is. And here we can see a count taken, 15 columns. That's 30 points of count. That gives us an objective range, 194 to 206. And so we could very well be working our way up to that. Then I want you all to go back and look at the bigger structure. Is it possible that there's a campaign structure developing in the Russell? And the Russell has some value characteristics and has been relatively out of favor relative to the growth stock theme in the last number of years. So could the Russell be one of the value areas to consider? So your thoughts, John?
Very interesting area, has some protection from a rising dollar. There are some good value propositions, dividend payers there. And the Russell is up just over 5% today. So I think your timing is right on there, Professor.
And you have, looking at the point and figure, the classic place to set a stop on a swing trade. Stops are so important. And it would just go below, right below this very well-defined resistance at that 176 level where both these peaks were made and this pullback occurred. And so that would be an important stopping place. And also there could be other ones as it works its way higher. And so, John, your final thoughts?
Another great show, Professor. Thanks for having me on, and happy to present a little value scan for folks.
We look for more in the future. And thank you so much for being here. And thank you all for being here. And we'll see you next time on Power Charting.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.